So now the lesson 4.1 is what are false breakouts? False breakouts are currencies on the chart when the price breaks an obvious level but suddenly changes the direction. And advice that I can give a person about the false breakout is trading a breakout is a popular and a viable trading strategy. However, as all breakouts traders are aware, some breakout will not materialize and turn out to be false or fake breakouts. This can be quite frustrating, not to mention that it can often result in losing a trade. And you know, when you're losing a trade, you are losing money, you are losing moolah. But many times, as a skilled trader can sense what is happening behind the scenes and react quickly to this type of a situation in the market. In fact, false breakouts and fake outs can be profitable setups when you know how to trade them. So this is an example of the fake breakouts that you can have. As you can see, we had a main resistance level here. We have a main resistance level, and obviously below it's a main support level. It's the support level. So it has been trying so hard to break the highest high. That was the high, the new high that was introduced in the market. And you saw here, it tried to break it and went down. It tried to also break that high and went down. So what's important for you to know which are false breakouts? You must firstly identify the highest high in the market. Knowing the highest high, it's gonna be much more easier for you to know when an attempt to break that highest high has been failed several times. Then you get to trade those false breakouts at that time and moment. So as you can see here, you would have eaten on the sells. Like basically here, it was not going to be easy for you to eat on the sells because you were going to anticipate that's going to move down to engulf these whole candles. But here it was going to be much more easier for you to start selling because you had previously seen that the previous support was there. And then even here, it was going to be much more for you to sell because you know you already have a structure that is there. So here, it was much more easier for you to know that this was going to be a true breakout. The reason being is that this thing has been trying several times to get momentum to be able to be strong enough to break above. So that is how you get to see these things. They are quite easy. Even on live charts, they are easy for you to master and to understand. So moving right along on the lesson 4.3, the power of a fake out pattern. After you have been on the wrong side of the breakout a few times, let me read again. After you have been on the wrong side of a breakout a few times, you should realize that these fake out formations can actually provide the high quality tradable opportunities. If you manage to identify a false breakout on the chart, then you can take advantage of these opportunities and position yourself in a reversal leg. In fact, some traders design their entire trading strategy around these types of scenarios, as it can be very powerful trading approach. Some of the best trades occur when the market players become trapped and begin to cover their losing trades. So if the false breakout is to the upside, you can short the Forex pair on the assumption that the pullback in the bearish direction is on its way. Contrary to this, if the false breakout is to the downside, then the expected pullback will be bullish, creating a long opportunity on the chart. Yes. The content is too much. I hope you guys are listening and you are taking notes. So now this is very important. How to identify the false breakout patterns. Now, how do you get to identify the false breakout pattern. This is the trickiest part of trading false breakouts. If you don't learn how to identify a false breakout properly, you won't be able to trade them profitably. For example, there will be times when you are misled or when you misread the price action for a false break and the price return back to the breakout point only to confirm the initial breakout and continue in the direction of the initial breakout. That is very tricky. One way to identify false breakout is by keeping an eye on the trading volume. Real breakouts are usually accompanied by a strong trading volume readings in the direction of the breakout. When the volume is absent, there is a higher chances of the breakout not to materialize. So if the trading volume is low or is decreasing during a breakout, then you are probably looking for a breakout trap. Contrary to this, if the trading volume is high or increasing, when you are probably having a real breakout occurring on the chart. So these are the examples of the fake outs again and the real breakout that you might have. So fake outs, they normally come in terms of spikes. So when you know the spikes that come, it's normally the fake outs. Most of the time, those fake outs, they come in the form of spikes in the market. So lesson 4.5, false breakout trading strategy. So it's important for us to also teach you how to trade these false breakouts. In order to stay disciplined when trading fake outs, you should create a specific set of rules that will guide you when these patterns occur in the market. First thing first that you need to know is the entry point when trading a fake out. The stop loss on the fake breakout and the target in the fake out trading. So basically this is what is meant. Let us exit and go to our chart. So for example, here, let me remove the drawings. For example, here, let me say you previously had this beautiful horizontal line here. You see this beautiful horizontal line here. There is no fake out here. But here, there was a fake out. There was no fake out here, but here there's a fake out. Already when you have a fake out, you already know that the market is trying to move further up. But the buyers don't have enough strength, they don't have enough money to push the market up. So what will the buyers and the sellers do? They're gonna come to the previous resistance, to the previous support. So you identify also the previous support. So you had a support here, and also on that support, they're expecting you, when you see that there was support, they're expecting you to start buying from that support. But now they are still collecting money, making sure that you believe that this is now a sell. There is a person who entered a sell here, thinking that it's gonna continue moving down. But this was acting as what? As a support. Then it bought and came back to get strength again on this previous support. Was this previous support with a young fake out also here. And then from there, it was gathering now the last strength to push even up, and came back again to fake out, gathering strength to push even up, came back again. Now, this was now an indication that we are done. We now have enough strength. We now have enough money to finally break above and finally get what? And finally get these buys. Again, we are coming back to that position, that level. If you are with me right now, I'd say expect these young cells again pushing down, and then from there you start buying further up. It's gonna start buying further up. That was a demonstration on what? On trading view. The entry point of the entry point. So now let me show you the entry point when trading fake outs. So here, the entry point when trading fake outs, it's always after that fake out has taken place in that direction, whether you're trading buys or sells. So it's always just like that. So right now, the entry point will definitely be after the fake out has taken place. On the next candle that follows, that's where you get to enter your trade. And then the stop loss, obviously the stop loss, it's always your chart stopper. And then your target, obviously it's always the next resistance or the support, depending on what you are trading at that time and moment.